who really calls the shots in the global gold market today?
It's the central banks. Last year, the number one buyer of gold was Poland. They're probably one of the top economies, at least growing economies within Europe right now. Jurisdiction matters. Where do you position it? And does it become escrow for war financing? Europe is still holding some insane amount of Russian assets right now. So this Ukraine peace treaty, Europe doesn't necessarily want this war to end because they have to give the money back. The US government, for really all governments, they've got a problem. They're all just exploding with debt. When nations are trying to refinance debt with the IMF or the World Bank, they start suddenly finding new gold mines, that's been pretty common. Gosh, it's $1 trillion asset. Well,
Uganda did that.
Yeah, El Salvador. I think we've seen China do it a few times. But then you've got companies like Barrick in Mali, where the government over there is stealing, their military stealing gold to the tune of hundreds of millions of dollars. Yeah. Gold is so critical that I'll make a prediction. I believe that they probably should take a very, very hard look. Barrick should probably move their headquarters from Canada to the US. They need military protection. We're really not sure where the world is going, but the wind is at your back. It's going to blow these commodities, in my opinion, is a commodity super cycle. Imagine the world is in a worse place, which is not too hard to imagine, but gold is higher. What do you think the tendency of some of these third world countries are going to be? Where if you're not part of what's coming, you could be left behind. Believe it or not, the amount of people that we work with that do own a lot of crypto and even though they publicly don't say they own gold or silver, they do.
What do you find appealing about Bitcoin? Just the Austrian economic side of things, or?
Yeah, and I would say I'm a little concerned about why they arrested Roger Ver. I don't see it replacing gold. And if you actually look, and if we're being honest, if you talk to the Bitcoin maxis, Bitcoin's narrative has changed every few years. And right now it's that it's digital gold. Well, that's because the technology actually stinks.
Before we get started, this isn't financial advice. Know your risk tolerance, do your own due diligence, and speak to a financial advisor. All right, today on the pod, we're going to get into who really calls the shots in the global gold market today. Is it the BRICS nations, Washington, or some of the world's biggest banks or financial players? To dig in, I'm joined by someone that I've been really excited to chat with, Josh Phair, founder and CEO of Scottsdale Mint, which mints coins for over 20 governments and central banks. That means he literally has a hand in sovereign level gold markets, not just retail. Josh used to manage risks for major mining companies at Willis Towers Watson, giving him a rare perspective on how geopolitics, finance, and precious metals collide. He's also, in my view, a leading innovator in this space and is behind the Wyoming Reserve, a U.S. gold vaulting initiative. And unlike most in precious metals, he's embraced digital innovation, even letting customers buy bullion with Bitcoin and Ethereum, and I think some other crypto as well. So few people see the collision of finance, geopolitics, and sound money like Josh does. And his market commentary in the industry, for the industry, to me is second to none. So today we'll break down the US debt, where precious metals are flowing, and some of the global forces shaping the gold and silver markets. And I hope to also touch on Bitcoin as well. So Josh, welcome to the pod.
Thanks for having me.
So let's start on a macro level. An important question, I think. In 2025, there's been a lot of, I got a little bit of market drama, but in respect to the gold market, I think a lot seems to have changed this year in particular, both at the retail and institutional level as to how people are viewing gold. But who's kind of calling the shots in the global gold market? Is it BRICS nations? Is it Washington, big banks? Who's actually moving the market in this gold bull so far?
Yeah, so that, I think we saw after COVID, the COVID year, consumers were out buying a lot of gold. And then things kind of settled down the last couple of years, and then we kind of turned into, call it Trump's election night last fall. Suddenly, we did see a lot of gold movement. We saw a lot of other things starting to kind of pick up, and then it was right around the discussion of tariffs, and so right out of the offset, people were thinking it was the banks. The banks are the ones gobbling it up. There's been an awful lot of gold movement all over the world, but in particular into the United States. So record-breaking gold that came into the U.S. And then as we saw what happened in 2024, as a lot of the data comes out, and we're watching in 2025, it's the central banks. It's governments are acquiring it for their balance sheets, frankly. So this is, we kind of look at historical ratios of how much debt to gold that these nations have held, and we're seeing a pretty big change. And so this is a huge driver. We're seeing last year the number one buyer of gold was Poland. They're probably one of the top economies, at least growing economies within Europe right now. They're kind of kicking everybody's tail. They're also positioning a third of their gold at the U.S. Fed. So a historical look at that would be jurisdiction matters. Where do you position it, and does it become escrow for war financing? So we are absolutely seeing gold on your balance sheets as being a critical component. It's really at the highest levels, and it hasn't trickled down to the consumer level just yet. But we're definitely seeing some changes. As we look at the performance of gold versus bonds. You look at the performance of gold versus, let's say, the S&P 500. Suddenly, it's outperforming bonds at every time frame, and so we start seeing things are shifting very, very fast. Where a lot of the central banks are literally printing more fiat each quarter, and they're buying gold almost on a systematic program.
So I wanted to get into that actually. So at the beginning of the year, there's a lot of talk about how all this gold was being shipped back to America. Now, I didn't really understand it, but you touched on it with Poland. I didn't really understand why, and I don't know what was going on. There's a lot of conspiracy theories, but was it more to do with the fact that sovereigns were just sending their gold back to America so to protect it or keep it there as sort of a collateral for a worst case scenario or a war in the future? Like, what was that all about?
Well, the old adage of possession is 9/10 of the law is legitimately a thing. And after World War II, a lot of the war debts were actually settled at the Bank of England. So that gold has been held there. It's been pledged. It's what finances a lot of impoverished nations. A lot of countries actually pledge their gold. So I think what we're seeing is there are some concerns. Is that gold fully there? Is it fully insured? Has it been audited? And you're seeing people just saying, you know what, let's bring it back to my house. So that's where really all around the world, this started with Germany a number of years ago. They moved gold, and it took them a few years to get it. And Venezuela asked for their gold, and they said, nope, we're not really sure who the president is. So the seizing of assets, of the Russian assets, when the Ukraine war broke out, I think shows, and Europe is still holding some insane amount of Russian assets right now. So this Ukraine peace treaty, Europe doesn't necessarily want this war to end because they have to give the money back.
Let's face it, one of the biggest frustrations investors have is taxes. You make the right call on that stock or explosive crypto trade, and then boom, half the gains are taxed. You took the risk and won, but the government takes their share of your gains. That's why I'm excited to introduce our sponsor of the pod today, iTrustCapital, the #1 crypto IRA platform in America. They've built a self-directed IRA platform where you can actually buy and sell crypto, gold, and silver inside a tax-advantaged IRA. Of course, you probably know trades inside an IRA are not taxable events under IRS rules. And I think the best part about iTrustCapital is they use the same institutional grade custody for crypto that BlackRock relies on. That is peace of mind. And they do it with no monthly fees, just a simple 1% transaction fee. I've spoken with the team and I like these guys. Real US-based customer service, security, and real tax advantages. And while I personally hold exposure to Bitcoin, gold, and silver through ETFs and mining stocks in my own retirement account here in Canada, iTrustCapital gives US investors the ability to hold the actual assets directly in an IRA. You can fund an account with a cash contribution, transfer an existing IRA, or even roll over an old 401k or employer plan to take more control of your future. So if you're looking to protect and grow your retirement with crypto, gold, or silver, check out our custom link in the description below and be sure to use promo code Pinnacle8 to claim your $100 funding bonus when signing up and funding a new IRA plan with at least $1,000. As always, all investments carry risk, and this isn't investment advice. Now, let's get back to the pod.
So the question is, are they using that capital? No one knows. So there's no doubt that people want their gold in their jurisdiction. The United States also, while it has problems, it's still one of the best jurisdictions in the world for property rights, for court of law, for rule of law. So you're seeing a lot of multinational companies are wanting their assets in the U.S. It's the best place to bank. It can be audited, financed. You can't do that in Latin America. So a lot of companies will move that material out and position it here. So that component, I think we're going to find out just how important gold really is to the world here as we go forward.
And there's this, I guess, this grumblings lately about revaluation of gold too, right? And I don't really understand how that would all play out, but like there's talk about Besant has been considering a move like that, but how would that actually work, or is it even possible in today's day and age that the U.S. government or I don't think it would be the Fed, but the U.S. government could revalue gold? Like, what would that do? What's the benefit if that were to happen for the U.S.?
It's I've heard all the different scenarios, and there is probably a few different lanes that something could fall into. So I try to deal with more with what do we know? Well, we know the U.S. government reports to hold X amount of gold, and then it has it at a very low price. What is it, $50-ish or something like that? Is where it's marked to a model that's outdated. So in finance, normal accounting, you mark to market or you mark to model. Well, what's the more appropriate way of let's say GAAP books? So it's marked to market. So I think anyone that can do some basic math, you can just take the spot price of gold at any moment and multiply it by how much gold is there, and so you say that's essentially what's in the war chest. So revaluation. At the end of the day, the U.S. government, for really all governments, they've got a problem. They're all just exploding with debt. They just keep spending more and more as they go. And I'm not really necessarily one that says, the United States, U.S. dollar is going to be doomed tomorrow. I mean, the reality is we are in some form of a currency experiment, but right now it's still the preferred. It's still the number most demand. Now that said, demand is waning. So we're seeing, now, the U.S. government has pushed out, stablecoin, the Genius Act, to help absorb some of that lack of demand for U.S. bonds. So we're in a tough situation where could the U.S. government, could the BRICS nations, could really anyone utilize gold as a more core function? So some people say they will be backed. I don't fully see that because that means that all politicians would have to be completely honest. They would be held to account. I just don't see that anyone voting for that. Now, the people might, but I just don't see the politicians. I think Elon Musk was a great example here in the U.S., trying to create some fiscal responsibility of spending, and no one was for it in D.C., unfortunately. So he quickly gave up. So now we're in a situation of let's go spend. So that component, but you are seeing, the BRICS nations are talking about utilizing gold as a settlement factor. Gold is kind of, think of it, instead of fully backed, maybe it's a base. It's a core. It's an underlying component. And I think that's how we really should be looking at gold, as the underpinning of balance sheets. So whether you are a bank, an institution, a family office, or just your own family wealth that you want to pass on to the next generation, we can hold real estate. We can hold we can hold stocks, bonds, all kinds of things. And when you look at it, especially in America, most people are incredibly undervalued or underexposed to gold, especially for this decade.
Scottsdale Mint, you're minting coins for over, I think it's 20 governments and central banks. But, you're never going to really hear central banks talking about gold. Like, what do those relationships tell you about how nations today actually view gold compared to, what they may say publicly? Like, how do central banks, and I'm talking about some of the more major players in emerging economies, how do they view gold today? To me, it seems like a lot of them view it as it's basically a quiet backing of their own currency. Is that fair to say?
Yeah, and you notice, like, when nations are trying to refinance debt with the IMF or the World Bank, they start suddenly finding new gold mines, that's been pretty common. Gosh, it's $1 trillion asset. Well,
Uganda did that.
Yeah, El Salvador. I think we've seen China do it a few times.
Yeah.
And I think anyone that knows mining understands the economic model of what's actually, a 43101 report about, like, is it actually economic? How much mineral could you actually extract, and what's the cost? So there's no doubt that gold is a critical component on the balance sheet. So really, it's the Federal Reserve System, which makes up the majority of all government. While we always hear of the U.S. Fed, it's really a network that, that's basically managing the assets, the money system for most governments. So some have more gold exposure than others. You're seeing, nations like China, who's not in the same system as the U.S., China, Russia, and others are raising dramatically how much gold that they have as their underpinning, because they're trying to create confidence in their economy, in their currency, those types of things. Others have almost no gold. Poor Canada just sold down, like, all their gold assets at just stupid prices, and no one's holding these politicians accountable. And then you could say Justin Trudeau's gone, but who replaced him? It's the same people. I'd say the one benefit is that Canada has assets in the ground, which is also why Trump is gently poking and teasing the notion of becoming another state. So but then you've got companies like Barrick in Mali, where the government over there is stealing their military, stealing gold to the tune of hundreds of millions of dollars. Gold is so critical that I'll make a prediction. I believe that they probably should take a very, very hard look. Barrick should probably move their headquarters from Canada to the U.S. They need military protection.
Let's face it, one of the biggest frustrations investors have is taxes. You make the right call on that stock or explosive crypto trade, and then boom, half the gains are taxed. You took the risk and won, but the government takes their share of your gains. That's why I'm excited to introduce our sponsor of the pod today, iTrustCapital, the #1 crypto IRA platform in America. They've built a self-directed IRA platform where you can actually buy and sell crypto, gold, and silver inside a tax-advantaged IRA. Of course, you probably know trades inside an IRA are not taxable events under IRS rules. And I think the best part about iTrustCapital is they use the same institutional grade custody for crypto that BlackRock relies on. That is peace of mind. And they do it with no monthly fees, just a simple 1% transaction fee. I've spoken with the team and I like these guys. Real US-based customer service, security, and real tax advantages. And while I personally hold exposure to Bitcoin, gold, and silver through ETFs and mining stocks in my own retirement account here in Canada, iTrustCapital gives US investors the ability to hold the actual assets directly in an IRA. You can fund an account with a cash contribution, transfer an existing IRA, or even roll over an old 401k or employer plan to take more control of your future. So if you're looking to protect and grow your retirement with crypto, gold, or silver, check out our custom link in the description below and be sure to use promo code Pinnacle8 to claim your $100 funding bonus when signing up and funding a new IRA plan with at least $1,000. As always, all investments carry risk, and this isn't investment advice. Now, let's get back to the pod.
So we are in a metals war right now. There's a lot of theater going on. That there is no doubt that it's not just gold. So think of gold as the monetary asset, but all that byproduct that comes out of gold mines is all. If you look at that periodic table and you get those lists of things we can't really pronounce very well, you hear about some of these critical minerals as being used in AI, technology, batteries, but this stuff is so critical for military, for AI, and if you can't build, the power plants, if you can't build the data centers, you're gonna lose control of the world. So it's basically like a gigantic race to produce energy and to produce computing power, and you need minerals. And so this is why the U.S. is really kind of, in my opinion, locking down the Western Hemisphere. So they're locking it down militarily. Relationally, we saw it with Panama, with the canal quickly. That changed. You saw Argentina has really partnered with the U.S. over the last number of months. Brazil's leaning more China. So I'll put out a prediction that could be a potential kinetic conflict in the future. So because those assets and those minerals should be used in trade, geographical location. So we're seeing the world is bifurcating so fast. And so this is, Trump and one of the Chinese delegates yesterday, they're smiling. And Trump says, oh, we have some few things up our sleeves that could destroy China, but we won't do that. Well, the reality is if you're even teasing about it, both sides are thinking about how could I destroy your economy, your military, with the stroke of a pen or cutting off supplies and resources. This is very concerning, at a high level, high macro level. And the United States has not probably taken the minerals and as serious as it should over the last 20 years. And suddenly, I would say people are paying attention to it now. They're moving quickly. You saw, the U.S. government, whether we can agree with it or not, they're making strategic investments in companies in the mineral sector as well. So I know that the big news lately was the Intel conversion of the grant that Biden did. So it wasn't new money; it was a conversion. But they are investing in graphite companies. They're investing in rare earth mineral companies. And so, the mining sector really has been underfunded to develop these minerals. And, it poses a wonderful opportunity for investors who we're really not sure where the world is going, but the wind is at your back. It's going to blow these commodities, in my opinion, is a commodity super cycle. And if you get into the right niche and just we can't control world peace. We can't control what the politicians are going to spend, but we can set up our own finances to at least take advantage and at least do the best we can in this environment.
Well said. You said something very interesting too. I'm a shareholder of Barrick. I've been for many years. It was a laggard until basically this year, and it's performed exceptionally well. But you bring up some good points. So with resource nationalism is on the rise. There's no question about it. Whether it's gold or copper assets, you look at First Quantum in Panama. Barrick obviously has its issues in Mali. There's been issues in South America with other miners. But you bring up an interesting point about Barrick might be well served to headquarter themselves in the U.S. because resource nationalism from some of these emerging economies, African nations, South American nations at times, they're more just the way I think about it is they'd be more inclined to push around a Canadian company, a country that doesn't have the geopolitical clout and the military clout that the U.S. does, than they would be an American company, because they know if they push around an American company, there's a very good chance that pisses off Trump and it becomes a whole issue. And so you bring up a very interesting point about that. That's a concern for Canada, in my view. Resource nationalism is a huge threat now in the mining space.
And it's not going to change. It's not just by physical seizing. It can be, we hear about nationalism, just taking of the entire resource. And I have a little bit of history. So I used to do both trade credit insurance, and I also did political risk insurance for mining companies in my past life. So I have some experience working with the EDC of Canada, working with insurance companies in some of these tougher countries. But it can also happen through taxation. Imagine the world is in a worse place, which is not too hard to imagine, but gold is higher. What do you think the tendency of some of these third world countries are going to be?
Of course. Change the royalty, tax, more, et cetera, et cetera.
So this becomes if you don't have the leverage, and I'm going to say this to the Canadian companies, is you guys got to get over, you got to get over, I call it the European-centric mindset of the World Economic Forum. Like, this is a new day, and we need to figure out how to protect your assets, your stream. I mean, I'm a big fan of, a win-win for the locals, a win-win for, but right now, China's not necessarily doing the best job in Africa. While they build airports and schools, they don't treat the people there that great. So I think this is the opportunity for what I would call good stewards of resources, and partner with these nations, as opposed to exploit. But you're also going to need to have that backing, that seriousness, that a country's going to say, you know what, we're not going to mess with this company. We're not going to push around. So, because you're going to have some back channel to say you can't just change the rules or the laws, or frankly just seize assets either.
Just jumping around a bit, staying on topic of gold and debt and so forth. But we're watching. I mean, the U.S. debt is ballooning in real time. It hasn't changed with Trump. He's going to be running a very similar deficit, I would imagine, as Biden did in his last year. There's estimations now that I think the U.S. could hit $40 trillion in debt sometime in 2027. It's way ahead of previous predictions, and there has been a surge of, as we talked about, gold being shipped back to the States this year. What I'm trying to get at is the U.S. debt deficit starting to hit American households in their mindset about how they invest? Are they looking more to gold, or is it still kind of the same mentality? You mentioned the allocation in the US, and I think it's the same in Canada. It's very, very small, if any, for most investors. Has the US retail investors' mindset changed toward gold in the last, call it, year or so?
I think there's an element of everyone's just trying to stay afloat. Right, cost of living is rising. Inflation has really hit people's pocketbooks. So when people say, "Oh, the consumer is tapped," that's true to some extent. Think of that as discretionary income each month that's coming in. But a lot of people have assets, and I don't know if you've been to restaurants or traveled. A lot of people are still spending a lot of money, so it's really of a choice. Really, we haven't seen a capital rotation event, meaning capital coming, exiting real estate heavily, exiting equity markets heavily. So normally I view it as there's going to be an event that will probably trigger it in mass. We are seeing some changes, though, I would say at the very high level. So the really high net worth, the big family offices, they are absolutely participating in the purchase of physical metal. And you mentioned I've got another company. We have an equity offering with special tax advantages. Those are the groups that are deploying capital. Is the more sophisticated. They see where things are going. They're positioning. Whereas I think the smaller, just say, the average Joe right now, I don't think they're really paying attention to it. And if anything, they go, oh, it's kind of high. But everything's kind of high right now. You've got the stock market, housing still pretty dang high. Most things are high. And until we see, I think some turbulence, that's when you're going to see the rush in into some of these things that aren't exposed to the credit market, that aren't exposed to the economy. Because really, gold, and to a lesser extent silver, because it has some industrial component, it's really a perfect hedge against what I would say just calamity of where you live, or the dollar, or the Canadian, whatever you've got, whatever you're facing. Normally, it does really, really well. And the thing I also like about silver right now is, just announced yesterday, the U.S. is looking at copper and silver as a strategic a critical mineral. So what does that mean? Potential stockpiles. They're going to be sending out the banks to acquire more of it. And if you look at the last minerals that they've done, some of these minerals have 3 to 5 to 10x over a period of number of years. So, and then you look at AI. You look at you just look at the growth of military spending. Silver is absolutely a critical component to it. So I do see people starting to pay attention. They're not on, what do we really hear when we turn on CNBC? It's like, oh, by the way, gold hit a new all-time high. And they just kind of scurry on and they don't really dig into it. But meanwhile, Larry Fink, he creates all these products for Bitcoin. And while I like Bitcoin and I've owned it for quite a while, I feel like they're like, hey, look at the shiny object over here. And that is sucking up, 3 sometimes $4 trillion of assets that would otherwise flown into what? Commodities.
Gold. Yeah.
Yep, that's right. So it's almost and now he joined the World Economic Forum. So as the head. So I just say, is he a fan of the people? And I don't even have to get, this is not conspiratorial, but it's just, what are they acquiring? What are they going after? But yet they're not really talking much about it. So I know it's coming. My company, the two entities that I have, one is on the manufacturing side, the other one is the vaulting facility. The vaults are out of insurance in a lot of these jurisdictions. So New York and London, they're pretty much tapped. These guys are way over their insurance limits. Most of the customers don't know. They get a certificate of insurance for their metal, but some of these places have 5 to 10% of all their material actually covered. And so they need geographic diversification. They need new things. So we're being visited by foreign governments, refineries. They're coming in to my facility here in Wyoming for also because of the tariffs. So production of some retail product like gold bars, for example, are still being tariffed into the U.S. So I think this is it's an exciting time to be in the space. I've been involved in the metal space the majority of my adult life, and it's just kind of wild to see it. There's not many of us in it, and so it's just a very intriguing second half of the decade.
Yeah, I agree. I do agree. We're in a super cycle as well, particularly for precious metals, I think. You brought something up. You talked about insurance. It's interesting. Like I have my core gold, physical gold and silver positions. I own some of the miners and so forth. But I've been buying and selling for the last, decade or so. One thing I noticed about, the gold market in particular is the spread is very inefficient, at least up here in Canada. And I'm wondering if what does that have to do with? Is that to do with the cost of storage, or is that more to do with it being rather illiquid? Like, what causes that buy and sell spread to be rather large? Like in Canada, it's probably, I would guess, 3.5%, 4%.
Yeah, so I'll address on the vaulting side. I'd say storage rates could be right around maybe 0.5%, all the way down to much, much, much lower for a bigger. Actually, we're just working with a sovereign group who owns an ETF, and we showed them within their first year, vaulting, quarterly audits with full insurance is cheaper in my facility than buying the ETF with the management fee, and a third of the cost. So we're talking a pretty dramatic, even that's with the metal acquisition. So it also depends on the volume. Wow. So the thing is, to manufacture a retail product is getting more expensive. So think of it as, you see the spot price that's quoted. Well, in silver, that's 1,000-ounce silver bar in New York. And then you got to stop it out, get it, the fees to get it. You got to ship it. Well, shipping costs are high. Theft and transportation has never been worse. Really? Insurance rates have more than doubled in the last 5 years. Yeah. So then you got to bring it in, you got to fabricate it, make it. And then there's a little bit of metal overage. And so what's happening is, whether on that 1 ounce gold bar, it's not 1 ounce. It's 1 point ... something. So well, now at $3,400 gold, that metal overage is more impactful than it was before. So the cost to make that is rising. And then it's just the trade of it. And so now some dealers, their spreads are bigger. I can't speak to how everyone sells it all throughout the world, but some places it could be potentially a 1% or less round trip. So depending on what you're buying and how, and how well you shop it, what are you doing, what are you looking at? But you are correct. Let's just say you're just going to buy a $1,000 purchase or something like that. Yeah, those spreads are probably pretty normal, just to cover the packaging, the labor to get it to you, that sort of thing, is how it works. But what is beautiful about it, like long term, is you're less likely to sell that product. True. So those that have been acquiring, and I've got, I was just talking to a construction worker that's been at my facility over the last number of years, and he says he's been buying gold and silver for almost all his life. Well, he's approaching 60, and some people spend their money on wine, woman, and song or whatever. And so this guy I have an idea of probably what he owns. And, he's a guy who's probably been dropping 500 to $1,000 every few months for all his life. And he probably has a really nice war chest that he's going to be able to pass down to his children.
Yeah.
So, I think that component versus when you own a digital asset or it's a stock, it's easier to sell it. You hit click, and I think between holding it at home, I'm a big fan of having, enough at home in your possession. But at some point, especially people that have been in the industry a long time, at what point is it not safe? It's not insured. It's a risk to your family. That's where having some of it at a vault that is audited and that you can visit, et cetera, is important as well.
I would imagine security is a big deal.
Yeah, coming in and out of our facility it's like going through a high security airport, except they're looking not only for weapons in, they're looking for metal out, that sort of thing. But it's a nice depository. So we have it's pretty awesome for those that we're not open to the public, but some of our investors or customers, et cetera, are able to come in. So it is a little different than your normal facility.
I would imagine. How did you, I know you're a serial entrepreneur, so to speak, but how did you form the relationships required to start a business like that? Not so much on the Scottsdale Mint side, but on the vaulting side. And you're dealing with, government, central banks, and institutions. How did that come to be?
A lot of looking at, so during COVID, the first few months of lockdowns, most people were not doing anything. And I was really looking at what is going to happen, this event and the response to the event of what is going to change everything forever. And so I sought out and started looking for special economic zones and found a site in Wyoming, which is the #1 sound money state in the nation, that had an opportunity zone, so special taxation, cap gain benefits. But I'm also in a foreign trade zone. So I'm a tariff-free facility. I'm audited under Homeland Security by U.S. Customs. So our vault is one of it. We're like the free ports you see in Geneva, in Hong Kong, in Singapore, where things can come in and out and be held here. So in theory, if there was a tariff on an investment product of any type, it could come in, be manufactured, shipped back out, or just stored in our facility forever. It could be sold between people. So this is, the United States never really, we've been a free market all our lives. But if we go back in time throughout history, taxation changes. And so here we are, and we're no longer a totally free market. So our facility we're building out an art gallery here because same thing, you buy, let's say you had a $10 million painting. Do you want to pay millions in tax? So it can come into our facility, be held here, be financed, it can be appraised, it can be sold, traded, viewed. So this is what the Europeans are more used to over there. And so this facility is, again, that's why I say, through a lot of prayer, little luck, I had no idea the tariff notion would come when I started this almost 5 years ago now. So. And I end up moving my whole company from Arizona up to Wyoming. So it's been an interesting journey, and it's not. And now I've got more governments, more refineries, more people, guys that have vessels and they move commodities around the world are visiting our site, opening up accounts for storage, for manufacturing, for different reasons. So it's a good time to be in the space and it's a little bit of field of dreams. Build it.
Yeah, amazing. I'm sure you've had some pretty interesting people come through there. A lot of people unlike most people in the precious metal industry, I think you've brought digital innovation into bullion a little bit, letting people buy gold with Bitcoin, Ethereum, I think Solana, and maybe others as well. But what was your impetus for this? And do you think we're heading toward a world where gold and digital assets are going to work together, or will they continue to be in competition? That's a loaded question, but do your best.
So I wasn't all that smart. I was on a Bitcoin website when it was sub-$1. And I looked at it, evaluated it, and it was a very convoluted way to purchase it. And it felt like it felt like a Magic the Gathering party.
Yeah,
and
big
I was
time.
like, this
Big time.
just isn't for me. Bad move. That would have been great.
Yeah.
But I at least got into it not too far thereafter to where I understand, the principles. It has very much Austrian economics at its core. People have learned what the word fiat currency means because of Bitcoin. And I met a lot of people early on a number of years ago that were Ethereum day one Genesis investors. They were early in Bitcoin. So I've kind of been able to see that. I look at, while gold and silver are my primary focus as a company, I kind of look at, instead of taking the Peter Schiff, which I also think he does that for engagement purposes, but instead of taking hey, it's either one or the other, have an abundant thought process. So I see it as, you mentioned, I think, the collision of digital and physical together. Physical is not going away, but we are going to see a lot of things come onto the blockchain. So that was another reason I selected Wyoming. It has the best custody rights of not only physical property rights, but digital rights. So you're seeing Kraken just move their headquarters here. You're going to hear an announcement of one of the major players are going to move their headquarters to Wyoming. And so our vault facility, while we're not a blockchain company, we want to be partnered and working with the guys that are bringing real world assets onto the blockchain. So imagine you've got $1 million watch, you want to fractionalize it, and it could be sold and owned, or a piece of artwork. It can come into our facility. We can be the custodian, the auditor, to take care of it, and it can be fractionalized. That will probably happen with rare earth minerals. How do you buy iridium? You can't. How do you buy almost everything on the periodic table? There's no ways for investors. So there's a number of companies looking at ways to bring, what I would say, investment opportunities to the digital space to be able to trade. So, if I'm the New York Stock Exchange, if I'm, a traditional platform, if you're not part of and I think we're going to see them as they start to fractionalize or digitize stocks, where if you're not part of what's coming, you could be left behind. So that's kind of the viewpoint of where I look at it. It doesn't mean you have to sell your gold to buy it. I know some of them are like, they tell the U.S. government, sell the gold to buy Bitcoin. Well, I don't think you don't have to get rid of a tier one asset in order to acquire something else. So I've taken more of an open approach to these things and try to bridge the gap. And believe it or not, the amount of people that we work with that do own a lot of crypto and even though they publicly don't say they own gold or silver, they do. And they take a little bit off the top and they go into the physical metal. Or they go into the fund, or this is where they like to kind of as you grow, you diversify a little bit. So I view it as, instead of hating, we can embrace a little bit of both, and they're both probably going to do well. A lot in the crypto space is going to do bad, obviously. So to me, precious metals is the no brainer. It's a lot more simple from that standpoint.
Let's face it, one of the biggest frustrations investors have is taxes. You make the right call on that stock or explosive crypto trade, and then boom, half the gains are taxed. You took the risk and won, but the government takes their share of your gains. That's why I'm excited to introduce our sponsor of the pod today, iTrustCapital, the #1 crypto IRA platform in America. They've built a self-directed IRA platform where you can actually buy and sell crypto, gold, and silver inside a tax-advantaged IRA. Of course, you probably know trades inside an IRA are not taxable events under IRS rules. And I think the best part about iTrustCapital is they use the same institutional-grade custody for crypto that BlackRock relies on. That is peace of mind, and they do it with no monthly fees, just a simple 1% transaction fee. I've spoken with the team, and I like these guys. Real US-based customer service, security, and real tax advantages. And while I personally hold exposure to Bitcoin, gold, and silver through ETFs and mining stocks in my own retirement account here in Canada, iTrustCapital gives US investors the ability to hold the actual assets directly in an IRA. You can fund an account with a cash contribution, transfer an existing IRA, or even roll over an old 401k or employer plan to take more control of your future. So if you're looking to protect and grow your retirement with crypto, gold, or silver, Check out our custom link in the description below and be sure to use promo code Pinnacle8 to claim your $100 funding bonus when signing up and funding a new IRA plan with at least $1,000. As always, all investments carry risk, and this isn't investment advice. Now, let's get back to the pod. Yeah, I share your views. I'm long, a few crypto, including Bitcoin. What do you find appealing about Bitcoin? Just the Austrian economic side of things, or?
Yeah, and I would say I'm a little concerned about why they arrested Roger Ver. So he was he was known as Bitcoin Jesus, and I personally don't think he ever sold his Bitcoin. So people kind of know him as Bitcoin Cash when it was forked, but that means he just got a copy. I don't know if he ever sold it. Well, he negotiated, based on the current with his lawyers. He exited the U.S. He renounced his U.S. citizenship, so he wrote a large check. I don't know his personal finances. And then 7-8 years later, he writes a book called Hijacking Bitcoin, which is talking about how institutions and government have hijacked Bitcoin, and he's arrested the next week. So I only say that as a caveat. I have concern about stablecoins, the CBDC, because a lot of these, if you actually think about the ethos of what Bitcoin was, I love it. It's you be a sovereign individual, and now you can be blacklisted, you can be canceled, and so that's kind of the concerning component that I've got now in the digital sphere. Is it could be an entrapment in sense. So that to me is a little concerning. But obviously the Austrian economics of just owning assets, I don't see it replacing gold. And if you actually look, and if we're being honest, if you talk to the Bitcoin maxis, Bitcoin's narrative has changed every few years. And right now it's that it's digital gold. Well, that's because the technology actually stinks. The technology is behind. It's old. It's not, and it's not changing like the other blockchains. They're able to upgrade it. They're able to innovate. They can program smart contracts, different things. Well, Bitcoin really can't. They're trying to figure out how to do things with it, but the reality is you just buy it and hold it. And my concern is that now it's being held by if you look at the top holders, who is it? Yeah, it's not people. I think the white paper originally was saying that's not what they maybe envisioned, but everyone's bags have been pumped, so you don't really hear people complain too much. But I do think that narrative will grow. My prediction will be that Europe will probably be the one to kind of gridlock CBDCs and basically kind of ensnare people, unfortunately, just based on and that could happen as soon as later this year or next.
Yeah, Europe just seems to love, the European leaders, shall we say, seem to love more layers of regulation, more and more control, very obedient population. And anyway, I could go on about Europe, but I want to talk about two more things real quick. Talk about tokenization. So this is something that interests me, because I think I don't necessarily think there's immediate bad from it, but I think there's a lot of interesting upside with tokenization of assets. It allows certain people of various different means and classes to participate in assets that were once and to this day are pretty much unattainable. So I find that very interesting. I wonder what the limits or the extent of tokenization could be, because essentially you could tokenize anything. You could tokenize nature if you wanted to. But what do you see? How do you see that tokenization move playing out in the financial world? Do you think that's 10, 20 years down the road, or do you think it's very near term?
This decade.
Right.
I think it's, things are, just look at what's happened, post, a half year into Trump. So you basically had to get rid of the SEC regime because no company could develop utility or within the space. So a lot of things were not being developed, at least publicly. And so now, they've cleared it, that people can develop, produce, create things, utilize things, and not be slapped on the wrist by the SEC. So they're creating a better framework for companies to develop because, Trump wants the companies and the capital to come into the U.S. and stay in the U.S. So I think it's going to move a lot faster. So I see it by, over the next couple of years, more and more things are going to come online. You're seeing Every time you hear a bank say, "Oh, we don't do this," I mean, Jamie Dimon was doing that with J.P. Morgan for years, but meanwhile, he had an entire secret team building out, building out within the industry. So I see it accelerating for sure.
Yeah, interesting. Do you think there'll be a moment in time where people's homes are tokenized?
Probably, and could even a home be tokenized and an architect own a royalty every time that home is sold? Like, I mean, these are the types of things that could, in theory, happen. And so that, depending on how you sign your contract, if you had a Frank Lloyd Wright available, and if he had a 1% fee, no different than an HOA. Some HOAs take 1% of the sale. Yeah. So I could see that happening. And if you actually think about real estate's kind of old fuddy-duddy. I mean, the signing and the mortgage process, the title process, it's convoluted and slow. So if you can speed that up digitally, take out less middlemen, and into if you can create a trustless system, within it, I think that's going to, in theory, lower costs long term, make things a lot easier. But inherently, at the moment, blockchain's difficult. Seed phrases and these wallets, so things are going to have to be developed to allow, let's say, the common man to easily utilize the technology in a little bit a more simplified version.
I think nominally tokenization has the potential to multiply the size of the global economy quite a bit.
Well, you're already seeing people, like, if you're, let's say you're on the other side of the world in a nation where the median income is a fraction of, let's say, the Western world. Someone over there can gamble or build a business and actually rise above. And so I do see, the possibility of some people are going to be left behind, other people are going to get ahead. So that is, I would completely agree. So, businesses that are not evaluating or figuring out how to be part of that new economy could eventually get left behind. I don't know what that time frame looks like, depending on what lane you're in, but it is going to be interesting.
Very interesting. Tokenization seems like the escape hatch for governments who are struggling to grow economies, tax base, etc. It's super interesting to me. Last thing before I let you go. So you talked about art, but I was prior to chatting with you, I was doing a little bit of research, and I read that you have acquired even NFTs. First of all, I am as ignorant as they come when it comes to NFTs. I don't know anything about them. I know the high level, but I don't know how to determine value. I don't know any of that. But when I look at NFTs, I mean, this is why one of the reasons why I was so interested in chatting with you is I think you have a very broad perspective, unlike a lot in the precious metal space who are diehard, gold bugs and silver, this and that, nothing else. But NFTs, I just struggle to find where do you see the value in digital art?
Yeah, and I think let me preface it for those that are like, how did he go from gold to NFTs? I'm a big fan of, like, often we hate things we don't know, or we just say things are ridiculous. And so I enjoy participating in these things. So I've tried a number of purchase. I've been part of different things, different types of art, anything. And I own even things like Bored Ape Yacht Clubs and Pudgy Penguins. And some of these things have risen hundreds of thousands of dollars in value and crashed hundreds of thousands of dollars in value. But for me to be in the space and to work with artists to create, work with digital artists, but my company, we want to create physical derivatives, gold, silver, whether it's a coin, it could be jewelry, it could be a statue, it could be anything made out of gold and silver. So I look at it as that convergence of, like, as the digital realm grows, people still want a physical derivative on their desk or something that goes into it. So I think it's the shared IP, the possibility of owning an IP. It's joining a club. This is no different than, think of it like, in the olden days, you would join a country club to go network within your community. If you're selling insurance or banking, or that's what you did. Now, the marketplace is so much bigger. And so because I have owned these assets, I can get into certain events. I have met really high CEOs because of this. And then, so I look at it as it's almost a digital pass. It's just joining, you're joining a club. And again, some of these things are going to go to zero. They're not going to go up. They don't make any sense. But some of this artwork is going to be very, very interesting. So, we just signed a contract with a fairly well-known gentleman, and we're looking at producing some things like this that are in both the digital realm and the physical realm. And so that's where, I think, to me, you got to experience things and lose, win, and be part of it. So I think it's definitely going to be interesting. And now imagine you're an artist, you paint a painting. Most of the time you don't make money until you die. Well, now this gives the opportunity where these artists can get, we were talking about an architect owning a piece of a home. Well, that artwork, in theory, that you can build it into the code where if that painting is sold, let's say it's sold 5 times over the next 20 years, that artist could clip a royalty each time. So whether you have a 1 of 1 or it's 1 of 10 or there's thousands of them, right? This is no different than investing in coins or baseball cards or anything.
Yeah.
So at the end of the day, it's going to be supply demand. Is it good art or not? Do people want it? And if not, it just goes to zero. And if something goes up, so take pudgy penguins, for example. It sounds, these are little cute things, but now they have stuffed animals. They're sold in Walmart. They're building video games. There could be a movie one day. And guess who gets a piece of the action? The NFT holders. Yeah. So, these, I'm not even sure where it's at, but these pudgy penguins have valued from a few $1,000s to, I don't know, $60,000 to $100,000 for a pudgy penguin. So they just run all over the place. So this is a very interesting, it's an interesting time to be alive. And, instead of just being a doom and gloom, even though my industry, I think we've got tough times ahead, it's also exciting to be paying attention to the changes and be part of it.
Absolutely. So with those NFTs, let's just say the pudgy penguins, if you are an owner of the NFT and that particular NFT gets a franchise movie or cartoon, something made about it, there's a way in which that NFT holder would collect a royalty, so to speak?
So oftentimes the floor price raises. So what is interesting about NFT art versus traditional art is, let's say my phone is a painting, and this painting, I bought it at an auction. Someone says, Josh, it's worth 10 grand, and I paid 8 for it, right? 10 years later, what's it worth? I'm going to have to go get it appraised in an art gallery. Well, in the NFT world, you can watch all the sales every single day throughout. You can see a graph, a chart. So these things they're tracked. You're able to follow it. And so as these companies there's the franchise Pudgy Penguins is purchased by a CEO named Luca Netz. When he took over the project, the other guy was failing. The Pudgy Penguins were in the toilet. So you could buy one for $1,000. Well, now you're going to have to pay a lot more because Luca is running the company, and then the company gets royalties as they're sold and traded. And then he's cutting deals with big companies, all the time. So this is a very interesting model that probably is going to go. I mean, think of it when you invest in a movie. So Disney was probably the best example of this before they went fully woke. But they would create a cartoon, they would go to market, and then what would they do? They would create toys, games, clothing, and all that royalty would spin up, in a very impressive portfolio, of residual income. So now, think of it as an NFT holder with the right environment, with the right company, the right group, has the potential to participate. I mean, they could do distributions, airdrops of either things that have monetary value, or just your floor price can raise. So if you were to trade it, so this is it's definitely changing the world. I don't know if you've heard of DAOs, decentralized autonomous organizations. Well, the only state that you can organize a DAO in is Wyoming. This is so Wyoming's very much wanting to participate in the new economy. It was the first state to create LLCs. Delaware was right behind it and did a much better job marketing it. Now you're seeing a little bit of shift. People are leaving, like Elon Musk is leaving Delaware. So I see as the digital age, it's not going to go away. It's going to go through a number of boom bust cycles, and then industry will form out of it.
Interesting. Yeah, I appreciate that breakdown. No one's ever broken down the NFTs quite like that. It seems to me that again, very ignorant, but it seems to me that you need a very good promoter or promoters behind NFTs.
And if you think about baseball cards, I think it's a great. I'm in my mid 40s. When I was younger, baseball cards was my life. I enjoyed it. I loved it. If I look back today, what's it worth? Most of it's worthless. Maybe I got a few rookie cards of a few guys that are worth something. So I think we're going to see the same thing in the NFT space. Is kind of the alpha projects, the blue chips call it. Those have the opportunity to really grow and maybe be worth a lot. Some of them, and the majority of them will probably be worthless. So I think we're early days, no different than the dot-coms. You know, how many companies came out of that dot-com cycle in the late 90s? And, as we turned into, 9/11, they pretty much all went to the toilet. And then suddenly, like, Amazon rose to the top. So it's think of it as decentralized ownership, decentralized ways of conducting business, licensing products, doing different things. So it's going to be, this is kind of the Wild West of what's happening. And then IP law, government, taxation is all kind of being formed around these new principles. Very
cool. Josh, this has been an awesome conversation. Wide-reaching for sure. I'm very appreciative of your time. Where can our viewers find you online and learn more about what you do?
Sure. My personal X is Josh Phillip with 1L Phair. You can find me on X. The two companies we've talked about, ScottsdaleMint.com. The other company is WyomingReserve.com. Those are the two companies I'm co-CEOs of.
Perfect. And we'll include links in the description as well. Josh, again, man, really grateful for your time. This has been a fantastic educational conversation. So thanks for joining me, man.
Yeah, thanks for having me.